Time to focus on business now, where the Iranian nuclear accord is creating havoc on the markets. Business editor Mike Eppel joins us now. Mike, good morning to you. Oil is dropping in response to the Iranian nuclear accord, and the Canadian dollar not far behind.
Yeah, it was down actually quite a bit more than where it is right now, Leah. It was oil dropped 2% right off the bat this morning when the news broke of the Iranian deal after midnight this morning, for all intents and purposes. The talk is that Iran currently has about 30 million barrels of oil just sitting in tankers, waiting to come into the market. They're under sanction right now. They can't sell. And if they come on stream, then you're looking at 3 million barrels potentially per day of more oil coming into an already oversupplied system. Yesterday we heard that Saudi Arabia is pumping at 10.5 million barrels, so Iran, that's a big producer potentially for this marketplace. Oil is below $52 per barrel for WTI, the Western Canadian Select price below 38 now, so it's again weak prices for oil and a weak Canadian dollar. It's all tied together. Our dollar's at 78.39. The inverse now north of $1.27 to buy one U.S. greenback. Also at play here, the Bank of Canada. What do they do with interest rates tomorrow? Some say they'll cut interest rates for a second time this year, but if they do that, they're going to have to do a serious about-face on their forecast and basically admit they got it wrong, that the economy is not improving the way they thought it would. But they wouldn't be alone in missing the economic expectations. 2 years ago, Mark Carney, our former Bank of Canada governor, now the head of the Bank of England, was talking about raising interest rates in the UK. That certainly hasn't happened. The US, China, all of these economies have been slow on the uptrend for the most part. And indeed, the US numbers this morning on retail sales below forecast for June. So does that take a September interest rate move off the table? We'll see. Royal LePage in with its forecast on housing. The real estate market a little bit easier to forecast for the most part, but it shows the numbers for the second quarter. Regional disparity. Vancouver, strong. Toronto, strong. Hamilton, very strong on a year-over-year basis. The Alberta housing market, cool because of the low price for oil. All of this is probably going to lead to a 6 to 7% increase nationally for house prices. Royal LePage saying, Bank of Canada tomorrow, don't cut interest rates. We don't need any more mortgage momentum in the already red-hot markets within the country. So we'll see how it all goes. Leah, back to you.
Thanks so much, Mike. That's business editor Mike Eppel. You can hear Mike on 660 News at 26 and 56 after the hour.
BT's Market Report is brought to you by 660 News.
And that is your news and business report this morning. Now back over to Jill.